Hi, I'm Brooke Thackeray. Welcome to What's Hot and What's Not in the month of December. We've seen October positive for the markets. We've seen November positive. And seasonally, December tends to be positive as well. Now, it's not quite that easy. Now, there are some differences during the month as well for the overall market. I'm going to get into that today. We're also going to be taking a look at the different sectors of the market that start their seasonal period around this time of the year and stocks as well. So let's take a deep dive into the seasonal trends for the S&P 500 and other markets as well at this time of the year in December. Here we are using Thackeray's 2023 Investors Guide. A quick note, quick plug I should say. This makes an excellent Christmas present. If you haven't got it already, it's available in bookstores right now. And let's flip right to the month of December here. And this is the average trend for the S&P 500 from 1950 to 2021. And if you take a look here, the first part, let's say the first third to almost the first half, tends to be flat, really. And then we see that the last part of December tends to perform very well overall on a seasonal basis. Now, this is often what we call the Santa Claus rally in here. The last half of December, it's when tax loss, the January effect starts to take effect as well. By some measures anyhow, we can talk about that. But so it's really December's broken up into a couple pieces here. The first third or first half, up to the first half, tends to be a little bit weaker than the last part of December. So we need to watch out for that. And the daily probability over the last, from 1950 to 2021, here you can see here that we can see some days that have been haven't breached the 50% threshold on being positive overall trading days. And the last part of December, particularly the last few days in December, the market tends to rally as well. So that tends to be a strong period within December. If we take a look at what's happening on the board here, if you want to call it that, this is the average and also frequency outperforming the S&P 500. So this is the average right here for the different sectors of the market, and this is ranked. These are the major sectors of the market. And look at this, utilities, average from 1990 to 2021, average 2.1%, and 56% of the time it's outperformed the S&P 500. Now that's a very interesting phenomenon. It tends to be a defensive sector. The investors are really trying, in this case, capture the market and perhaps seek a little safety at the same time. Last year, utilities was the top performing sector in the market for the month of December as interest rates were rising and the S&P 500 was going up, which was really unusual to see. But we did see that, and so it's something to watch out for. Utilities could perform well once again, and they've had performed quite well in 2022 overall. Now the material sector tends to perform well here on an average basis, but only outperforms the S&P 500 47% of the time. So that means when the material sector does outperform, it tends to be skewed more positive to the upside with larger returns overall. Industrial tends to be positive. Both of these sectors are actually performing extremely well since the end of October in their seasonal period as well. Financials tends to be a top performing sector. That sector has been outperforming. Telecom, healthcare, consumer staples tends to fade off here. And consumer staples has been performing extremely well, really, recently relative to the S&P 500. And so just a word of caution. Right now, we can see the consumer staples sector start to roll over relative to the market. Consumer discretionary sector here as well tends to be lagging, and the consumer discretionary sector has not been performing well over the last few months. Energy's been turning down. It tends to be one of the weaker sectors in the month of December. Now, just a note of warning on that. We have seen the energy sector a few times over the last few years all of a sudden put a bottom in late December. So watch out for that. So it tends to be weak during the month. Well, it still has an average performance of 1.3% versus 1.5 versus the market. So what that's saying is that when it performs well, it can be skewed with some higher numbers to the upside compared to the downside. But something to watch out for. But this usually happens later in the month of December. We can see this start to pick up. The official, my start date for the seasonal period for the energy sector is February 25th. Now that can, we've seen that start. We've seen the energy sector start to pick up in January sometimes as well, and really when you push it to late December as well. And information technology. Whoa, look at that, right at the bottom of the list here. But watch out for that because it really comes down to, if you take a look at the information technology sector, it has some ups and downs in December. The last part of December it's performed well from 1990 to 2021, but the first part of December can be particularly weak for the technology sector. So watch out. And overall, we've seen some weaker results for the technology sector. So just something to watch out for. If we take a look at this list down here at the bottom here, home builders, 75% of the time outperforms the S&P 500 in this time period. Now, home builders, there's a lot going on in that sector. With rising rates, hitting mortgages, etc. So, we'll have to see if that can hold true this year. That's not something I think would be a big, huge barn burner to the upside on this, given the overall macro environment. Steel tends to perform well. Metals and mining, we've seen performing well. We'll talk a little bit about that. Biotech tends to be one of the weaker sectors right now. Agriculture, silver down here a little bit here as well, starts to pick up a little bit. And if we take a look, I just want to scoot this all the way, if I can. Oops, sorry. Gold. Right here, way down here. Autos are not typically good in December, and then gold tends to not perform well relative to the S&P 500. But I want to put a big caveat here. We have seen gold tends to perform well, has a strong seasonal period starting in late December and performing well into late January and extending really out to March as well. Sometimes. But over the last few years, we've seen gold, when it's been beaten up like it has now, start to put in a bottom earlier, sometimes in late October, even November. And perhaps we've seen that this year. We'll have to take a look and see if that's the case. But it does have a strong seasonal period. It does start later in December, but it does have some technicals that have been shaping up for it within that pre-buying window where you start to take a look at the sector itself, even ahead of the actual seasonal date. So we start to see a little bit of a consolidation and strength for the sector. I want to do some page flipping in my book around the time period. We'll start in late November, some of the sectors and stocks, and then we'll move into December and we'll take a look. Metals and mining starts a strong seasonal period November 19th. It's actually been outperforming the market recently. It's had some big updays, which has helped to balance it out overall, but it has been outperforming the market. If we take a look here, here's a month of December here. Look at December. December tends to be quite strong for the metals and mining sector. Here the cross represents the median and the bar represents the average. So this is one of the better months of the year for the metals and mining sector. It's only been positive 56% of the time, but really if you go all the way across, February is a little bit higher than that, but you don't see a lot of strong positive months as far as frequency goes. But this December tends to be one of the months. But what that's saying is the frequency may not be that strong, so you have to be a little bit careful. But when the gains are there, they can really pay off here. And it's outperformed the S&P 500 59% of the time, which is the highest out of all the months since 1990 relative to the S&P 500, which is saying basically that December can be a positive month for the metals and mining sector. And look at this cross here. The median's been high for the in this case for the metals and mining sector in the month of December as well over the last 5-year while from 2017 to 2021 overall. So something to watch out for. Here's a graph of the ETF in the States. XME represents the metals and mining sector. This top panel is the XME, and the middle panel here is XME relative to the S&P 500, the relative performance, and that's going to be the case for the next few graphs as well. But here you can see for the metals and mining sector, it's been outperforming well in October and November, and outperforming the S&P 500 since, well, let's go back here, since really July of this year. And more recently, it's just been perhaps a little bit flat relative to the S&P 500, which isn't a bad thing coming into its strong seasonal month. So we're setting up well for this sector in the month of December coming up shortly. Now, it is a sector that's very vulnerable to economic conditions as well. So we have to watch out for that. And there's been a lot of stuff happening in China overall that could have a damper on the market and also to the sector. But right now it has been consolidating into a strong month, which is usually a positive signal. Let's turn the page and take a look at the UPS. Okay. We've seen a lot of, media covering, not UPS so much, but about the freight prices and transportation and lack of buying. It doesn't sound good for UPS, which has a long seasonal period from October 10th until December the 8th, which is just coming up shortly, be careful because it tends to start a short period where it tends not to do well from December 9th to March 1st. And we can see that right here in this graph here for UPS, where December tends to be weak. It really starts about after the first week in December, and look at January here. It does not tend to perform well. It's only been positive since the year 2021, 36% of the time. It outperformed the S&P 500 36% of the time. So UPS tends not to do well this time. And if we take a look at what's happening for UPS right here on the graph here, so this is when their strong seasonal period started was October the 10th. Relative to the market, you can see here that it's performed well, and it's also outperformed the S&P 500 as well in its strong seasonal period, but it's coming up to a time where it tends to roll over, and investors need to be cautious of that. Let's turn the page again, and we can take a look here. This is the month of December coming up, and we've gone over the general information there, and we come into, this is a new strategy I added from my book. It's Brinks. It does particularly well in the month of December. If there's one month of the year on average from a seasonal perspective that you want to take a look at Brinks, it is the month of December. And here you can see here, I'm just going to show you the bar chart here really quickly. Look at the average performance and the median performance for Brinks. It tends to perform very well at this time of year, and 77% of the time being positive and 73% of the time outperforming the S&P 500. So something to watch out for. And well, let's take a look at Brinks here. And if you take a look at the graph, we can see here that right now we've seen Brinks actually, well, we did see that long correction for Brinks actually that took place here. Okay, and then we saw a pick up here, and this is probably on earnings here because that was a little bit of a spike. And then we've seen it flatten out here a little bit. So this is probably a pretty good pattern for Brinks at this time. Heading into a strong seasonal period as well to watch out for, but something to take a look at as far as a stock that performs well in the month of December. Let's flip the page once again. If we take a look here, we go into in this case here, this would be well, I've got a piece on the 10-year inflation break-even rate, and this is based upon inflation expectations for 10 years. And I put it in the book here, and it says basically from December 20th to March the 7th, inflation expectations tend to pick up. Now, there are ways that investors can use this, and there are products built around this as well. But the main note, I think, for most investors is that watch out. We've seen inflation expectations come back down here a little bit, but they can start to pick up a little bit later in December. So something to watch out for. Let's flip the page again and go on to do the NAS with Santa. NASDAQ gives more at Christmas from December the 15th until January 23rd. So a lot of, the media talks about the Santa Claus rally taking place around Christmas. Sometimes it's the day before Christmas or the day after Christmas or both days. But I've taken a look, according to my research, it says basically, December 15th, well before what people really expected. So earlier I talked about the second half of January December being positive. This is really when the rally takes place in here, and particularly for the NASDAQ as well. Some really good stats for the NASDAQ overall compared to the S&P 500 in this seasonal time period. And I've gone back to 1972. You can see here the bar here and the cross. So average and mean are much higher than the S&P 500, which is the diamond. And the NASDAQ in this time period outperformed the S&P 500 70% of the time. So where do we stand for the NASDAQ right now? Well, if you take a look here, we can see the NASDAQ has not been performing well at all relative to the S&P 500 and on an absolute basis as well. Now, I want to point out here that we do have this little bit of a double bottom taking place, and we do see a little bit of a breakout. But the NASDAQ tends to be a little bit weak in the first half of the month. So you have to be a little bit careful with that. So it's a little bit iffy as far as that goes. But the fact that we've seen this big pullback relative to the market, and we've also seen a big drop in the NASDAQ as well. In this case, we're using the NASDAQ, the QQQ ETF, is indicating that, well, if we do see some stabilization, the market is able to get a strong foothold. We could see the NASDAQ perform well in the second half of December, starting the second half of December into January. Something to watch out for. Obviously, the NASDAQ has not been the place to be in 2022 overall, but it does have a strong seasonal period coming up shortly, so something to watch out for. Let's flip the page once again. Here we are. If we flip the page, we go over into the Small cap effect. Okay, so small company effect. Now, this is really a play upon the January effect because, and this could be significant this year. We have to watch out for it. There's going to be a lot of tax loss selling. There's always some question about which sector is going to be the best tax loss selling, have the biggest losses. But overall, it's the small caps that people sell, investors sell. And the reason why they sell them is they tend to be more speculative and they want to hang on to their large caps, as part of the core part of their portfolio. So if there's some tax losses to sell, it's usually favored towards the small caps. And that usually happens, in the first part of December. There used to be a lot of talk about, well, it really goes until late December, when the actual tax loss date finishes up, where you can sell your stocks in 2022 and get the tax loss benefit for that year. But that's not really what's happened overall on average on a seasonal basis. Usually you've seen the stocks really perform well in the second half of the month, including the small cap sectors that can be sold off in the first half of the month. So watch out for the small cap sectors to perform well, particularly in the second half of the month. And we've seen this here where it finishes up its relative performance in early March, and this has actually been a key date for this sector as well. We've seen it finish its seasonal period on Q a few times relative to the S&P 500. If we take a look here, here's a month of December, and that's really from the second half of the month as well. And you can see here into January, February, and into March, and that's really the first part of March where it tends to perform quite well. And if we take a look at the sector itself here, we're using IWM for the small cap sector here. We've seen this double bottom take place. We're in a consolidation period here. And it's interesting, we've seen the small caps, after performing just abysmally in 2021, in the first part of 2022, the sector's actually performed at market, and more recently, over the last few months, it's actually been outperforming the S&P 500. Now, a rising U.S. dollar helps small caps because small companies generate their revenues in U.S. dollars versus large companies that have a lot of revenues overseas, and a stronger U.S. dollar hurts the revenues overall. So that has been a factor. But if the market does turn speculative, we could see the small cap sector actually do quite well in a strong seasonal period come up. I just wanted to point this out though. Here's last year's. Here's where the small cap sector starts the seasonal period. Obviously started early, but look where it finished. Right on cue. At the end of its strong seasonal period as well. So you don't necessarily catch everything with the increase in during the seasonal period, and you're not taking part in the market in the other parts of the time of the year, and sometimes the market can go up at that time. But it is uncanny sometimes how we do see the small cap sector actually end its seasonal period right on cue. Now 2020, if we go back to 2020, it was actually in late February. Now that was very COVID related, mind you, of course. But just something to watch out for. Small caps are coming up to the strong seasonal period as well. Something to take a look at. Okay, let's flip the page once again. Here we got, in this case, we're going on to financials. Okay, so the financial sector has a strong seasonal period that lasts from December the 15th until April the 13th, so halfway through the April. And if we take a look here, we can see that really the sector can start a strong seasonal period early here as well. Like in November, the median is way up here, which is a good sign. And also too in October. So we can see that happen. In fact, that's exactly what we've seen this year. And look, in January, we tend to be just a little bit below average. And, in February, I should say, the median is way up here again. And March, it once again down. In April, here we are halfway through halfway on the bar here for the median. If we take a look here on a relative basis, this is like a sawtooth pattern for the financial sector. So it's really being driven by macro conditions overall. So you just have to watch out for that. But the sector is performing well now. In fact, we can take a look at that. And something to watch out for as it enters into its strong seasonal period. And then U.S. banks release their full year reports for earnings coming up in mid-January as well. So it'll be interesting to watch the performance coming into that as well. So here's the XLF, I should say, ETF in the States. And this is relative to the S&P 500. Look at their performance recently. We saw that strong performance take place here. In fact, look at this year. Last year, I should say, in 2021, 2022, we saw that really strong performance coming in at the early in the year, and then we've seen it taper off here. So we've seen some strong performance. We're coming up to, from a techno perspective, we're coming up to the resistance point really on a double bottom, possible breakout. So overall, the sector is looking reasonable coming into a strong seasonal period very shortly. And sometimes, as I mentioned, and looking at some of the graphs, we can see that it can be a little bit choppy around that as well. So something to watch out for, but nevertheless, it could be a good sector coming up shortly. I wanted to talk about some bonus sectors that aren't in my book at this time of the year right now, at least not the 2023 book, but I want to take a look at the utility sector. The utility sector, look at this strong performance relative to the S&P 500 this year. We're using XLU in the States relative, in this case, to the S&P 500. And look at the performance last year. In fact, it was the strongest performing sector in the month of December as interest rates were rising and the stock market was rising. So, we saw the sector do quite well. We have seen this pullback here recently in the market as markets moved more to a risk on, which has been a very positive thing for the markets. Because when we saw the utility sector underperform, that was really indicating that investors were shifting to risk on and being a little bit more comfortable overall. And now we're seeing relative to the S&P 500 a little bit of a consolidation here on an absolute basis, being performing well. But this consolidation relative to the market heading into a month where it does well could be a signal that this could be a good sector from a seasonal perspective in the month of December. Now, it doesn't usually fit with some of the cyclical sectors that take place here. But if we see technology and some of the growth sectors underperform, we could see the rotation from those growth sectors into the utility sector, which is often the impetus for it to do well. So watch what's happening with the growth sectors, particularly, the technology sector is what most people follow, the consumer discretionary sector as well, and also to the communication as well. So watch out. We are coming up to a strong seasonal period for utilities in the month of December. So just something to watch out for, and it could do well. I want to talk about silver. Now, silver in my 2023 book is actually in the January month. I have to shuffle things around a little bit. But if you want to take a look, go to the January month here. But silver tends to perform well from late December into late February and can perform, if it gets some strong momentum, well into March and April as well. So we can have a little bit of an extension there for silver. Now, if we take a look at what's happening with silver, we can see here that we've seen this consolidation pattern taking place, and recently we saw a little bit of a breakout above that. So really around the $21 level for silver, which has been positive, and we've seen relative to the S&P 500, which because it's a commodity, it's a little bit different. We do have some resistance a little bit higher up here for silver, and I didn't draw that line very straight, but around the $22 level. But right now we are seeing some positive indications for silver ahead of the time when it tends to start a strong seasonal period, which is late December. Now, if the metals and mining sector performs well in December, watch out for that, because that could be an indication that the silver sector could also perform well. So watch, if you're looking for a lead really for this, the metals and mining is one of the things you would be looking at. So something to watch out for. And we have seen that big pullback for silver earlier in the year, and usually that means that there can be a good buying opportunity in December here, or it's possible we've already seen it in October as it's been rising as well. But this is a sector I like to write about this time of the year because it does provide some good opportunities for silver. And if we see a correction in December for silver, if that does take place, it's usually the last few days in December that represent a good buying opportunity. Usually 3 or 4 trading days, somewhere around there before the end of the month, is often a good place to make a stake as far as that goes from a seasonal perspective. So I want to talk about gold really quickly as well. It's not in my book around the December month. It's actually, because it has 2 seasonal periods, it's actually in my book around July. Gold tends to do well in July into early October, but it also has a strong seasonal period from late December until late January as well, and can go longer than that as well. And if we've seen gold here, we've seen gold actually, it's really had a bad year. At least from March, a lot of that was a geopolitical tension that was taking place at the time that put in the high around the Russia-Ukraine war. And we've seen that pull back as interest rates have moved higher. It's really hit the gold here a little bit. But recently we have seen some stability here. We've seen a bottom bouncing along here. And if we go all the way back here, that's actually back at, here we're looking at similar, at least tops as is trying to form this resistance point at the time, and now this is actually support. But here we are. We've made this big correction throughout 2022. We've seen a little bit of a bounce recently for gold, which is good as we move to a risk-on model. And I've noticed that that's partly because we've seen a little bit of a fallback in interest rates, but it hasn't all been because of that. There is more interest in gold at this time. Gold can perform poorly in December, so watch out. And it's one of the things that you have to watch out for. But at the same time, it can represent a good entry opportunity later in the month. Now, sometimes it starts earlier in the month compared to starting it later in December. Sometimes it starts early in December, sometimes November as well. In fact, let's take a look at where it's put on a bottom over the last few years. This is a graph of gold going all the way back to 2013, late 2013. And I want to show you where the gold has bottomed in the last 4 months of the year. And it's been surprisingly consistent to see a bottom around this time of the year. So if we take a look, we're going to go back to 2013. That was a December bottom that took place, late December, right on cue for a seasonal period. In this case, in 2014, we saw a bottom in early November. 2015, we saw it in November. And 2016, we saw a bottom in late December once again, right on cue. And then in 2017, it bottomed in mid-December. And then here, this one's interesting. In 2018, we saw a bottom in the month of October. Now, don't forget, this is the year of the Powell pivot. It did move a little bit higher, but really, too, you could have gotten in even in December and still performed well for that. And then 2019, we saw a bottom take place in November as well, once again. And then once again in 2020, we saw a bottom in late November, early December. And then in this case here, 2021, so that's last year, we saw a bottom really take place in October, but didn't move much higher before late December. But once late December came around, we saw that run up. So what we've seen is a fairly consistent pattern over the last number of years of gold putting a bottom in somewhere in the last 4 months of the year and moving higher at least into the new year from here. So we can't say that that's going to happen this year, but something to watch out for as far as gold goes. So December is going to be an interesting month. There's a lot to watch out for. Investors really need to look at this overall seasonal pattern for the month, where the first 1/3 or half tends to be a bit weaker. Now, there is something I do want to show you this graph too for the S&P 500. Something that says we might see that weakness coming up for the S&P 500 in the first third of the month or first half of the month. So if we take a look at this graph here, this is a graph of the S&P 500 at the top here, and the bars are the volume for the S&P 500. And if you take a look, there's something really interesting in this graph here. And what you want to see is you want to see a rising market like we've seen in October and November. And you also want to see a rising volume, which indicates that more investors are participating. There's more commitment to the rally. But that's not what we've seen here at all. The volume's actually been decreasing quite substantially here. So that's showing a lack of commitment to this rally, which is concerning given that the first part of December tends to be, let's call it flat or a little bit weak. So we could see that consolidation and backfilling taking place. Now, you may say, well, Brooke, at this time of the year, the market tends to have lighter volume. Sure, around Thanksgiving Day, that can take place. But look, if we go back here, 2021, the volume dropped off in the month of December. 2020, the volume dropped off in the month of December. In November, we didn't see anything like this in 2020, 2021 as well. We didn't see that take place. So this is quite a bit of a drop, which means that we could perhaps see a little bit of weakness for the market in the first part of December. So something to watch out for from that perspective. December is an interesting month for the markets. This is really where some investors really try to shape their portfolio, start shaping their portfolio for next year. The big shaping, I think, really takes place in January for that. I call January the sorting hat month, where investors really jostle for which sectors are going to lead. And I'll talk about that later on here. But from a seasonal perspective, we're still in a strong seasonal period for the market. We've done well. The market's been right on cue for in October and November from a seasonal perspective. There is some concern, perhaps, that we might see a little bit of consolidation here taking place. There's a lot going on in the world right now. And investors are really going to try and start to take a look at what analysts are saying about the market for 2023 as well. So there's going to be a lot of information for the first part of the month. In the second half of the month, we're going to see some, in the first part of the month, we'll also see some tax law selling as well, which also could put downward pressure on the market. That's typically the small cap sectors that partake in that small cap stocks because investors want to sell their more speculative positions typically. I'll have to see this year. Every brokerage house has some sort of different spin on it, but we could see small caps actually start to pick up. Could be a good opportunity in the second half of the month, particularly if we see a pullback in the first half of the month for December. So we could see this really, two halves of the month, or a third and 2/3, I should say, of the month as well for December. Of course, the stock market can move higher throughout the month as well, which would be great news once again. So something to watch out for. Now, just a little bit of a footnote too. This could be good or bad. Also, we've seen the Federal Reserve do some pivots in the month of December. When I mean pivots, not necessarily raising rates or hiking rates, but trying to reset expectations a little bit here. So there's a lot going on in the month of December coming up. I've tried to show you some of the sectors that do well seasonally and tried to identify some of the seasonal patterns about when there could be a good seasonal entry opportunity into those sectors as well. But it's going to be an interesting way to finish the year. We've seen October do well, November do well on seasonal Q, and let's hope we have a positive month of December to finish off 2022. Thank you very much for joining me today.